Welcome to episode 10 of my 100K Hola Prime Prop Firm Challenge series. This is a series whereby I document all the trades that I am taking in order to pass this 100K Prop Firm account from the beginning till the end. I have promised that I am not going to hold back anything. I am going to share with you guys all the wins and all the losses, irrespective of how they come. Whether I start with wins or I start with losses or I have no trades, I will share with you guys everything. For those that have been following this series for a while now, you would notice that I did not post any video last week. And the simple reason for this is because there hasn't been any substantial change on my account balance. The way my account balance was upper week, there hasn't been any significant increment or reduction on my account balance. And I really felt there was no need for me to post any video about it last week. And that is the reason why I decided to wait an additional week for me to have a substantial difference in account balance before making a video for you guys. So here I am this week with an update. So as you can see on my trading journal, I have indicated all the trades I took for the past 2 weeks. All those trades that I have opened and closed within the past 2 weeks with a blue highlighter. So starting from this first trade here, which was on Euro card, I closed this trade on the break even. Let me show you guys the charts. This is it. This is the trade I took on Eurocard. Ignore this one for the time being and let's focus on this one below. I actually took this trade and I was expecting to take profit around this level. So immediately I saw another opportunity to stack on this trade. So I decided to stack on this trade by adding to it. Then I moved stop loss on this initial entry to break even. And I took another trade, another entry. So what happened was when I got stopped out on this second entry, the break even of this first entry got triggered. So that was how I ended up closing this trade on a break even. As you can see, I took a loss on the second trade and I took this first trade on break even. So that's what happened here on Eurocard. I entered this trade July 27 and I closed this trade August 6th. The next trade I closed was on Euro USD. What happened on this trade was I entered this trade using my weekly time frame strategy. I intended to hold this trade for a very long time, weeks in, weeks out, weeks in, weeks out. Like for weeks, I intended to hold this trade for several weeks. But I noticed that the current trend on Euro USD was downtrend. Like maybe the overall trend might be uptrend, but at the moment, the current trend for Euro USD, I noticed Euro USD was moving downwards. If you look at these structures, the way they were breaking, lower, low, lower, high, lower, low, lower, high, like the structures were breaking downwards. And I feel like this is a downtrend. Like for the time being, the general trend might be uptrend, but for the time being, this is a downtrend. So while price was here around this particular spot, I was like, why don't I take advantage of this short-term downtrend? Just continue trading downwards, you get? And then if I eventually get stopped out, that was when I will know that yes, the uptrend is ready. You understand? So This is exactly why I opted out of this trade around this level. I closed out for a little profit. Closed out. Yeah, so I closed out for a profit of about $326. All these trades were taken the weeks before, the week prior, so I'm not going to talk about them. So the next trade that I closed was, yeah, I think this was the very first full TP I closed. This was a perfect Fibonacci entry. This is my perfect Fibonacci entry style. As you can see, there is a liquidity sweep right here, and there is a break of structure. After this break of structure, when I saw this retracement downwards, I used my Fibonacci from swing low to swing high, and I took this trade and I waited. This trade actually took about 2 weeks before it finally hit my final TP. And I so much love this trade. This is my perfect A plus setup. Perfect. I would take this trade any day, anytime if I see the opportunity. Yeah, that's the trade on AUD CHF. Trade on AUD CHF was perfect. I closed this trade with a profit of $1,001, which is my full 2.17 hour trade. Okay. The next trade I took on GBP JPY and closed it on a loss. Yeah, I actually lost 0.5% on this trade because, as you all know, I usually risk 0.5% per trade. Yeah, this trade was taken using my normal weekly time frame strategy. I was expecting, I used my Fibonacci from this swing low to this swing high. I was expecting for this level to hold, but eventually this trade just went straight and hit my stop loss. So from this trade, I just know that the JPY pairs, USD JPY, CHF JPY, CAD JPY, the JPY pairs are kind of trying to change their trend. They are trying to change their trend from uptrend to downtrend. So moving on, going further, I am not gonna be buying the JPY pairs, especially the CHF JPY, GBP JPY, CAD JPY. I'm gonna be looking for opportunities to sell these JPY pairs. I'm not gonna be buying them any longer because they've broke this, especially this GBP JPY has broken all possible structure level. It broke this first structure level, broke the second structure level, and it has broken this third structure level. So I'm not going to be buying GBP JPY anymore. I'm only going to be looking for opportunities to sell this pair. So I took a loss, 0.5% controlled loss on this setup. So the next trade I took and closed was on BTC USD. And I think this trade I also closed for a partial win of $243, which is around 0.25%, 0.24% or so. And the reason why I exited this trade prematurely, I actually exited around this level. I exited because I saw the nature of the structure. Like I took this entry from here, swing low, swing high. I was expecting this price to like continue going bullish. But I noticed that the structure is shifting. Yeah, I noticed that the structure is shifting. Like this is bullish, but there is kind of like a change of character right here around this level, around this region. There is a change of character from bullish setup to bearish. So I was like, if I continue holding this trade might end up coming to take out my stop loss. So I was like, to be on the safer side, it's best I just exit right here, take my small profits and leave. I felt that this trade has become invalidated. So if I continue holding, it's eventually going to come take out my stop loss. So that was why I exited this trade for a partial profit of 0.24%, which is okay, which is okay. But let's see how it goes. Let's see how it goes. So the next trade I took was on USD card, and this was a loss. I took a loss on this USD card trade. I was also risking 0.5%, and this is the setup. Yeah, this is my normal Fibonacci play. I had this structure level marked, and I was expecting. I took my Fibonacci. I drew it from this swing low to this swing high, and I was expecting this stop loss level to hold, and I was expecting price to move to the upwards to my take profit. But no, the price had other plans. The market had other plans, and it eventually took out my stop loss. There is still another structural level right here below, down here. So maybe the market is trying to come test this lower structural level, like come test the lower structural level before bouncing higher. Maybe that's what the market is trying to do, but I took a loss here, and it's fine because my risk was managed. Yeah, I took, I took like a lower um loss than what I even intended. I planned on losing about $500, but I ended up losing around $479 on this trade, which is good, which is very, very good. It shows that my risk management is top notch. The next trade I took and closed was on card CHF. I took this card CHF trade on August 3rd, and I closed on August 11th. This card CHF trade is just like my AUD CHF trade, and this trade was perfect setup, my perfect A plus setup, and it netted me full TP of 2.1 RR, and I got out with about $1,104. This is the setup of my card CHF trade. Perfect, perfect banger trade. Just like the AUD CHF win, this is also a perfect win for me. My normal strategy, there's a liquidity sweep right here. Liquidity sweep. I took my Fibonacci from swing low to swing high. Immediately I started seeing this retracement back to my structure level. I set my limit on the 0.684 fib level, and then I rode this trade, or I rode it to TP. I rode it to TP. I allowed this trade to hit TP on its own. When this trade closed, I was like, yeah, hell yeah. Yes, the days of my losing streaks are over. Yes, the days of my losing streaks are over. And now the winning streaks is going to start. Yes, this was a nice win for me. Nice. Full TP. So the next trade I took on AUD USD, I actually closed it for a small loss. I closed this trade on AUD USD on the, I don't have the chart here. I forgot to put the screenshot here, but I closed it for a small loss of about 0.26%. That is around $266. Yeah, because I was trying to like sell AUD USD, but I felt that price was still bullish in a way. Price was giving me bullish signal on AUDSD, and I was like, Kai, if I keep holding this trade, it's eventually going to hit my full TP. So let me just close it for a small loss. And it did hit my stop loss. It did hit my stop loss. If I had held this trade without closing, I would have lost about $500 on this trade. Yeah, I would have lost 0.5% or $500 on this trade. So it was really a nice thing for me to close this trade early. The other trade, yeah, this is the same Euro card I showed you. The first trade I showed you on Euro card. This is the same trade I took, but I was trying to document the second entry, this entry. If you remember, I showed you guys this chart already. This was the first chart I showed you guys where when I was telling you guys that I stacked on my Euro card trade, I had two entries. So this part of the journal is just showing you guys this second entry. Remember, I took an initial entry. I was expecting to go further in profit and take profit, overall profit here. And then I got an additional entry to stack and ride the two trades to final TP. So I moved the stop loss of this first entry to break even. I moved the stop loss to the exact stop loss of the second entry. That's what I did. I took the stop loss of the first entry and I moved it to the exact stop loss of the second entry. So when I got stopped out on the second entry, I immediately got triggered on my break even for the first entry. So that was how I closed this first entry automatically at break even, which was a nice about one to one point something R trade. And I closed the second trade on a loss, which was nice. So both trades kind of canceled out. They canceled out. I got overall, I made profit on this Euro card trade. Yes, overall, I made good profit on this Euro. It was a net positive trade. Both trades netted me positive ROI. Yeah, so the next trade I closed, okay, the trade on silver, I was risking 0.5% on this silver trade, and I actually closed this trade prematurely too. I closed this trade prematurely with a $98 profit, just a meager $98 profit. I closed it in profit because I felt that this trade is correlated. This chart, silver chart, is correlated with the chart of Euro USD. Both of them are giving similar downtrend vibe. They are giving similar structures. Both of them are moving downtrend. And I was like, I have a trade opened on Euro USD and I have a trade opened on silver. To me, that sounds like overexposure. I felt like I was overexposing myself because if I take a loss on Euro USD, I might eventually also take a loss on silver. So instead of losing two trades, it's better I pick one. If I lose on silver, I know I'm losing on just silver alone. And if I lose on Euro USD, I know I'm just losing on Euro USD alone. I don't have to lose on silver and also lose on Euro USD. That would be overexposure, and I'll be losing about 1% on both setups. So that was the reason why I closed this trade prematurely on silver, and I let the trade I have opened on Euro USD to just continue going. If I lose on the Euro USD, it's fine. I'll only be losing 0.5%, which is my normal risk. Now, the last trade I closed I got stopped out was on GBP NZD. GBP NZD, I was risking 0.5% on this setup. I took a sell on this setup, and this is the chart. This is my GBP NZD chart. I took my Fibonacci from this swing high. There was a break of structure right here. As you can see, it's an obvious break of structure. Break of structure right here. I was expecting this price to sell from here. I took my Fibonacci from this swing high to this swing low. I was expecting price to come bounce on this structure and then continue going down. but I got stopped out. Yes, I got stopped out on this trade. It is what it is. My risk was managed. I was just risking about 0.5% here, and I lost around $512. This $12 was, I guess, maybe swaps, commission, all those trading fee and what have you. So it's all right. My risk is managed as usual. So one good thing I know, one good takeaway so far about my trading so far is that I am able to stick to my risk. I haven't felt the urge to increase my risk. Since I plan to start risking 0.5%, as you can see now, my risk is constant 0.5%. So since I started risking 0.5% on all my trades, I have never felt that urge to like, okay, let me increase my risk in order to pass this challenge quickly. Because usually this is what kills most traders. As you start risking and you start trading and you are not really making the money you want to make as fast as possible, you start feeling the urge to like YOLO your trades. You start feeling like, okay, let me just increase my risks to 2% per trade in order to pass quickly. No, I know I have been there before. If you do that, that will be a recipe for disaster. If you increase your risk, I can assure you, you're going to blow the account. You are going to blow the account in no time. The best way to grow your way out of drawdown is to keep your risk the same. Do not try to increase your risk in order to pass as fast as possible. I can assure you, you are going to blow the account. And I'm not ready to start blowing accounts. I've blown some accounts in the past, but I want to imbibe this good trading habit whereby I would trade as a professional trader. I'm trying to be a professional trader here. I'm not just trying to gamble my way out of drawdown. So that is why I am happy that I am able to continue sticking with 0.5% risk per trade, which is a good thing. Yeah. So this next part is me trying to show you guys where I am at, where my balance is at the moment. For those that have been following this series for a while now, you would notice that towards the end of my documentary, I would show you guys my account balance. I started showing you guys my account balance from phase one. This is my phase one. I showed you guys how my account balance changed from the start of my phase one, how it was fluctuating, any increment, any decrease in the account balance, up till when I finally passed, up till when my account balance got to 108,000 and I passed phase one. So I have continued to do the same thing even on phase two. I showed you guys my account balance when I started, when it was still $100,000, when my account balance was still at $100,000 starting balance. Showed you guys every week at the market close of every week, I would come on here and document my account balance on this spreadsheet. You can see how the losses transition. This is when I entered my losing streak. My account balance went to negative 3.14%, went to negative 4.67%, went to negative 6.36%, went to negative 6.41%. And now I am beginning to build back my account balance. And now at the moment, as we speak, this week, as we speak, my account balance is negative 5.12%, 5.12%, which means for the past 2 weeks, I have managed to make 1.29% in profit. Yes, I have managed to gradually increase my account balance by 1.29%, which is a good thing. Which is a good thing. This is really, really, really positive to me. I'm really, really happy about it. This is a sign that gradually, if I continue trading like this, if I keep at it, if I continue trading like this without deviating, I will gradually slowly but surely bring myself out of drawdown. What I want to see now is for these negatives to start decreasing. Maybe by next week, it should be negative 2% or negative 3%. By next week, it will be negative 1. By upper week, it will be negative 1%. And then it will start entering the positive territories. Then you guys will start seeing positive numbers until I hit positive $5,000, because the target for this phase two is $5,000. I just need to make 5% on phase two and I've passed. Yeah, so this is everything about my trading journey for the past 2 weeks. As you guys can see, it is really positive. You know, you guys can see the improvement. I'm improving. So as it stands, as at August 14th, 2026, my account balance on my Hola Prime Phase 2 challenge account is $94,880. And I am officially 5.12% in drawdown. Yes, I'm halfway in drawdown. It's not a bad thing. It's not the end of the world. Past me, something in with my previous trading experience, past me, something in me will tell me, why not just YOLO this account? Use the remaining of your account balance and just hit a very high lot size and come out of drawdown drastically. No, that's not how it is done. I know by now, if I do it that way, the probability of blowing this account will be high. So I have decided that I'm going to gradually trade my way out of drawdown. That is it. So if you enjoy this series and you want to continue following my journey and you want to see if I'm eventually going to come out of this drawdown or not, please like this video, subscribe to this video. Let's grow together. Support my channel, support my journey. I believe we're all gonna make it. We're all gonna be profitable traders. I believe we're all gonna achieve our dream through forex trading. And with that being said, I will see you guys in the next one. Peace.